There's one thing to look at the headlines and listen to what Tesla is doing and get enamored about where this stock can go. I think there's another discipline, which is actually just measuring what's going on in the marketplace. We recently looked at the software that's available and coming available in the next year from the automotive companies across the board, and Tesla stands above. It's not even close. I won't get into the details of it, but this company has a multi-year advantage in a market that will be turned upside down over the next decade.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So it's official. On Monday morning when the stock market opens, Tesla stock is officially part of the S&P 500. Now for those of you who missed it, here's the action in the final seconds of trading in the final moments of Friday afternoon. Tesla stock hovering around that $550, $560 per share mark, then boom, heads to the moon and immediately to Mars, closing at a whopping $695, an all-time high closing price for Tesla stock. Including aftermarket trading, Tesla stock saw volume of over 220 million shares, more than quadruple its daily average volume over the last 3 months. Anything but boring. So in this video, I'm going to be reacting to some of the media coverage of this epic event. Let's get into it. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Tesla driving straight into the S&P 500, the electric car company making a big U-turn in the after hours as it gets added to the index. Here we are down by 3%. This, of course, after Tesla hit yet another record high during the regular session. Karen, we've all been watching this very closely. What's your proclivity at this point when it comes to the stock? Earlier you said you would look to short it.
Yes. Thank you for bringing up a very painful trade.
Oh, Melissa, you savage. Now, for those of you that don't have any background here, I've been watching the folks on CNBC for quite a while, and I've noticed Melissa is a voice of reason. She's always questioning some of the stupid comments from people on the panel. But not only that, and I'm not suggesting this is a stupid comment, she also likes to remind people who've royally fucked up attempting to short Tesla. Let's throw back to earlier this year when Melissa cut to Tim Seymour, who'd been very publicly short and has been clearly completely dead fucking wrong about Tesla. I love this. Low-key savagery at its best. Over to you, Melissa.
Thank you very much.
Kathy Wood of ARK Invest. From the bull, we go to the bear. Tim, you still short?
Sorry, so I think you were calling on me.
One of the all-time classic moments on CNBC. Melissa, what a savage. I love it. And she's back for round 2, this time with Karen.
Karen, we've all been watching this very closely. What's your proclivity at this point when it comes to the stock? Earlier you said you would look to short it.
Yes. Thank you for bringing up a very painful trade. So I put it in order to short market on close. And then when I saw the stock trading down at maybe 3:40 p.m., trading down, right, $10 or I don't remember, 12, I thought, wow, this is not quite what I was expecting, how this was going to play out. So I canceled my short. And it ended up, the market on close price was what, $6.95, I think? So that was very distressing that I did nothing. I would have covered right away. I was trading in the after hours or Monday morning. So I have no Tesla position, and yet I feel worse than I did yesterday, having no Tesla position. I don't know.
Let's bring in Grace Battis of Grace Capital. She joins us now. We had some technical issues which we've ironed out. So Grace, we're happy to have you here join the panel. In terms of Tesla, I think you're, amongst the broader trader panel here, you're actually bullish longer term.
I am bullish on Tesla. I think Tesla is being priced. It's expensive, okay? Everything is expensive. New York real estate is expensive. I think Tesla is being priced like a monopoly, and it reminds me of Amazon. Okay, you could have bought Amazon and you watched it go up and up and up and nobody understood.
Speaking of Amazon stock, I actually know a guy, got a YouTube channel, 3 first names, obviously his parents are trolls. Anyway, he bought Amazon stock around 2016, is up about 300%, bought at a time when everyone's like, what are you talking about, man? The stock can't keep going up, it's so expensive, what are you talking about, ridiculous. Reasonable return. The same kind of thing was occurring with Tesla. These patterns sometimes repeat themselves with growth companies. Some people that really get into the weeds see the base, the foundation that's being built. Others, surface level look, don't really get it, pass up on the opportunity. And occasionally these people do eventually come around to the company, investing a few years later after the stock's headed towards the moon, doubled, tripled, quadrupled or more. It is what it is.
Tesla has a market cap that's larger than all the other auto companies combined. I think it's got a lot of optionality here. And the secret to Tesla, so long as they can keep borrowing money for cheap, convertible stock, convertible debt, the stock is going to work and the strategy is going to work.
And they've done that several times this year in terms of shoring up their liquidity position with various secondary offerings, et cetera, in the marketplace. Brian Kelly, at one point, was Tesla ever one of those stocks that you put in a drawer and you leave?
In fact, what a phenomenal memory you have, Melissa. In fact, it was one of those. And it's my view on this, and the reason why you put it in the top drawer of you buy the stock, you put the certificates in the top drawer, or at least the top drawer of your digital side table. Nonetheless, the point being, I think Tesla is more than a car company. I think the investors in it are thinking of it as more than a car company. I think this is a play on the decarbonization of the electric grid. The Tesla automobile and their automotive department is just kind of the proof of concept. So if you think of this much more of as a venture capital deal, where all these capital raises are similar, are like a series A, B, and C, then you can see how there is much more upside to Tesla. And I think that's what the investors in Tesla are looking at.
I like this. Buy a Tesla stock, hold, check back in a decade or two. Seems like a pretty good plan to me. In fact, that's basically what I'm doing.
All right, let's bring in Fast Money friend Gene Munster of Loop Ventures, who I know is watching the rebalance at the close very, very closely. I think with popcorn in hand is what you tweeted, Gene.
Great minds think alike. And by the way, I've just noticed 20,000 Twitter followers, which is pretty impressive for a dude that hasn't mentioned his Twitter account once on this channel. So congratulations to everyone who's stalked me down on social media. And even more special congratulations to those people who found me on Instagram too. It's not like I'm hiding, but hey, I'm not really desperate for even more DMs coming through every day. There's enough as it is. So please don't add me on Instagram or Twitter. Thanks.
So what'd you make of the action here? What should we expect on Monday morning?
Well, I made the action. It's funny. I tuned off a minute before the close here. I had to apologize that I was remiss at leaving the party just before the fun started. But I expect it probably moderates a little bit on Monday. But what's more important is ultimately where this company is going. And if I can frame in, I think the panel's done a great job of really highlighting the importance of the story here, which first, there is no valuation support to Tesla regarding their current business, the current revenue, $45 billion a year. But when you think about the optionality value, and I'm going to make it as simple as possible, there are 7 different verticals that they're going to be going after. Most people think of this as an EV car company, but there's autonomous taxis, robo-taxis. You have HVAC, insurance, even down to electric jets. I mean, all of this is on the roadmap. So I think Brian's venture analogy is most appropriate. And I think that regardless of what the action is on Monday, I think that this company can be a much bigger company in the years to come. And one thing I just want to, there's one thing to look at the headlines and listen to what Tesla is doing and get enamored about where the stock can go. I think there's another discipline, which is actually just measuring what's going on in the marketplace. We recently looked at the software that's available and coming available in the next year from the automotive companies across the board, and Tesla stands above. It's not even close. I won't get into the details of it, but this company has a multi-year advantage in a market that will be turned upside down over the next decade.
This is a powerfully important point here from Gene Munster. Tesla's software advantage is enormous, and it's not something that's easily visible to a casual observer. A lot of the software powering the company is behind the scenes. You don't really get an understanding of their software prowess unless you dig beneath the surface. One great example of this is the fact that Tesla doesn't use enterprise software to run the company. They've coded their own solution. This alone is extremely rare with any company, period, let alone an automotive manufacturer. Never mind how critically important software is to running the factories, to running the vehicles, from everything from thermal management to infotainment and security and more. Maybe you've heard Tesla is the only automotive manufacturer who can deploy over-the-air updates and make their vehicles far better than they were at the point of purchase. For example, Tesla has enabled over-the-air updates and performance increases that have done things like improve range, increase acceleration, enabling a slew of new features like dog mode and sentry mode. And of course, we can't forget about full self-driving. Over time, Tesla's software advantage will become increasingly obvious, but as I mentioned, unless you actually pay attention and know what the fuck you're looking for, this is easily overlooked, and it's one of the most important pieces of the puzzle.
Gene, everybody's looking at this event as a forced buying event because managers will have to buy about $85 billion worth of Tesla stocks who are benchmarked to the index. And yet this is also a forced selling event. And not many people are talking about that in terms of what do fund managers sell in order to make room for Tesla. What's your view? You cover some of the high-flying sort of consumer discretionary techie type of stocks that might fall into that category.
Yeah, there is going to be a fracturing of FANG. It's very clear what's going to happen in the next few years, and what has worked in the past won't work in the future. Companies like Apple are really well positioned in the digital transformation. I think you're going to see money inflows to this. I think this is a $200 stock in the next year plus. But then on the flip side, you look at companies like Facebook and companies like Netflix. I think that those are sources of capital for these funds. I think just other traditional businesses are sources of capital, but I think that's going to be a strong theme of this fracturing of FANG. The simple approach of owning FANG isn't going to work for outperformance. There's certainly great companies, but I think Tesla is one. You just need to own it and don't think about it. I like the idea, Brian's put it in a drawer and forget about it. But I think companies like Apple are really going to be a big beneficiary, and Facebook's got a ton of headwind coming at it in the next couple of years.
Gene, great to speak with you. Thank you. Gene Munster, Loop
Thank
Ventures.
You.
This change is also going to have a significant impact on the S&P 500 more broadly. Tesla is now the 6th largest company in that index, and because of Tesla, the S&P's earnings will fall 1.3% next year. Its PE ratio will rise to 22.6 times from 22.3 times. Tim, what do you think? Do you think that investors should will feel this change? The volatility of the S&P 500 would theoretically go up too because Tesla's volatility is greater.
True, but it's also a $660 billion company, and conceivable there's more of a buffer built into that. But I think the valuation on the S&P is troubling. But you add in a 1,200 trailing PE stock here. I would just add to the whole story around Tesla, which people well chronicled, that I haven't been a believer here.
Now, I've got to give a little credit here to Tim for actually admitting the fact that he's been rather anti-Tesla, because it's getting more and more difficult to admit this publicly given the fact that the stock is headed to the moon and is now on its way to Mars. Now, I do feel for Tim. I mean, everyone makes mistakes, some of them more catastrophic than others, but the poor guy in the past has been lapping up the so-called research from Gordon Genius Johnson. If you guys want to fact check me, jump onto Twitter, look at some of the interactions between these two. It is absolutely hilarious. In my opinion, Gordon, who may or may not be a puppet for oil, may or may not be qualified to be sharing his opinions, may or may not actually manage any money whatsoever, allegedly in my opinion, do your own research, appears to have misled many Tesla shorts and bears astray. Confirmation bias, just trying to find reasons that they're right, reason this company's failing. Oh, look at this great research about sales collapsing in the Bahamas, therefore indicating that there's no demand for Tesla. You better sell everything. By the way, we think next quarter sales are going to decline, deliveries are going to decline, credits are going away, profitability is going to disappear again. Please, this company's terrible. Our price target is like $3. I'm Gordon Genius Johnson.
But two events have added basically almost $400 billion of market cap, seemingly. A stock split announced on August 10th or 11th took the stock up 83% to a blow-off top at the end of August. And then the S&P inclusion announcement, I think from November 16th through the current, is another 69%. That's a 150% move in the stock based upon two technical events for a stock that has been about technicals as well. So I think you have to remember that here. And I don't care what anybody says, those are very big factors, I think, that will weigh on the stock.
Now, these are reasonably fair points if you're looking at Tesla through a very skeptical and bearish lens. Oh, stock split was announced, stock goes up. S&P 500 inclusion was announced, stock continues to go up. But it is possible, maybe, just maybe, there is an alternate explanation. It is possible that at the same time these events have taken place, people have started to believe in Tesla for other reasons than the fact that the stock split or that they're due for S&P 500 inclusion. It is possible that more and more people have taken a second look as the narrative has changed and started to realize, oh, you know what? They do have an unassailable lead. They are incredibly profitable. That operating leverage is really starting to come into play. I like this company. I think they're going to dominate EVs and more into the future. I might buy the stock. Of course, there's no way to really know the reason why Tesla stock has continued to grow over the last few months quite consistently, but I can tell you one thing with a high degree of confidence. As of Monday, when Tesla stock opens in the S&P 500 index, there's going to be a great deal of media coverage about this momentous event in the stock market. And I have a funny feeling, I know, super scientific, a funny feeling that a number of people who previously dismissed Tesla will suddenly reconsider their position now that it's legitimized by being added to this very reputable index, the S&P 500. Does this mean Tesla stock can't give away some of these massive gains we've seen in the last few months? Certainly not. Anything could happen, but I'm here to tell you, over the long term, I personally believe Tesla stock is still just getting started. I have a funny feeling in 2030 and 2040, when we look back on Tesla's market cap in 2020 around $600 billion, most people will think, you know what, I wish I bought it then. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.